to this computer. All right, cool. So we'll go ahead and just kind of continue, guys. All right. So let me kind of just break down TradingView. If you are brand new, guys, this is a website where you're able to look at charts in detail. You're able to actually do analysis on these websites. This is where you're going to spend most of your time. It's not going to be, if you're spending most of your time on VitaForex or Race Option or, Platinum Options or whatever, just your broker, you're not doing it right. You want to spend most of your time on TradingView, on Hourglass, on Liberty, on one of the obviously strategies that we have, so you can be looking for chart markups, guys. And so what I'm going to do, so I'm going to go ahead and I'm going to ditch Bitcoin. I'm going to kind of remove some of this stuff real quick. And I'm just going to make sure that these lines are all what they're supposed to be before I start marking this stuff up real quick. Okay. And I'll kind of tell you what these are too. You're going to definitely want to be able to favorite these on your guys' own TradingView, because if you favorite them, you'll just remember them obviously better, which is going to be really important. Let's see, we also got the rectangle tool right there. That's cool. And then all right, that looks like all of them. So just a little bit about how to use this, guys. In general, you have the option, right in the beginning to make this light or dark. You can choose what you would like to do. I'm going to go ahead and I'm going to just make this dark for this session. On the right side here, this is called a watch list, where you can store the things you want to pay attention to. And so you can obviously click the plus button. You're able to add anything you would like, GBP, USD, you can add, any currency pair you would like. And I'm going to talk about that here in a second. You can remove the ones that you aren't going to be using. If you see here, I moved all of these down. Just in general, I moved all this stuff down on the right side. If the videos are in the way of what I'm showing, just drag them to the bottom of the screen and move them around when needed, guys. But I just kind of keep this open right here. And so one of the first things I kind of want to cover is with trading. If you're trying to learn how to trade on your own, what you want to do is you want to master one or two currency pairs. You see on Cash Trap, and you see, obviously these traders, like some of them are trading a lot of different currency pairs, but you got to understand that these are countries, these are continents, these are like economies. And, obviously trading these, they're a different beast. They're all completely different. And so that's why it's very important to know, one or two of them to start. Because it's a learning curve. You have to understand this economy first. You have to understand when are the biggest moves of the day. You have to understand what time of day do you trade it at, guys. And so some of the ones that I focus on, actually I'll say that here in a second. Ones that a lot of people focus on when they're brand new are USD, JPY. People focus on Euro USD. Some people obviously focus on NZD USD. This is where you get a little more different. USD CAD, Euro JPY. But I think if you're brand new, you should focus on learning USD JPY and Euro USD. Right there, guys, that's three currencies, three economies, three, obviously countries that you want to pay attention to, / continents that you want to pay attention to, just currencies in general, guys. So that's three that you have to learn, master, and understand when to not trade it, because it's very crucial. I've been a victim of it when I first got into trading currencies. Is I would just hop on random times of the day, click on a random currency pair, kind of see how they all look on the broker, and then I would just start trading anyone I wanted to, when it's really important that you actually trade it at a certain time. And so I would focus on Euro USD and USD JPY, guys. And so what I'm going to do is I'm going to go ahead and I'm just kind of checking these out real quick so you can kind of see it a little bit. But I'm going to go ahead and I'm going to focus on USD JPY. I'm actually going to show you how long I've been doing chart markup sessions for. It's actually insane. But so I basically, when I first started trading, the first thing that I did in order to learn the currency pairs better is I had to learn what time of day you want to trade these currency pairs at. And so we're going to focus on USD JPY specifically throughout this entire chart markup session, guys. And so the best times to trade USD JPY is either in the morning when the US market opens, or it's at night when the Japanese market opens. Trading in the middle of the day for USD JPY is the worst time to do it. And the reason is because when the banks open, either in the morning in the United States or the banks open in Japan, obviously at different times, 12 hours apart, 7 p.m. or 7 a.m., 7 p.m., that's when the market moves the most. And you want to trade when the market is moving the most. If you see that the market's moving sideways, it's consolidating, you don't want to trade that. What you want to trade is when the market is in an trend, you know, uptrend, downtrend. It's not consolidating, it's moving, it's actually you know, catching pips, it's fluctuating. That's when it's volatile. That's when you would like to actually trade it, guys, because that will put you really far into profits if you are correct about your trade. You know, it's funny, everyone that, you know, obviously usually joins this academy, they start off with HFX. They start off with high frequency Forex. And the reason that is because it's easier to understand. That doesn't mean it's easier to make money though. You know, it's easier to understand. It's easier to comprehend for someone who's never had any sort of trading or investing experience in their entire life. But there are other styles of trading where there's no time limit. You get into the trade wherever you would like, and you can hold on to it as long as you want. You can sell it right away whenever you want. You are in more control. But the double-edged sword to this is there's more, you know, there's more things to pay attention to in terms of numbers. Like how many pips is the trade going to move? Being able to actually, you know, have a trade setup, you know, dialed in and figure out, you know, which way is the market going to go and in how long a time. Not that you're choosing a time limit, but it's kind of a trade setup. We'll talk about that here more towards the end, guys. And so obviously you can scroll on this on the right side here. Here are a bunch of numbers. This is for USD JPY. This is representing how much Japanese yen is worth a US dollar. You can stretch this out and look at the candles in a more stretched out manner. So you're able to actually, you know, zoom in, you can start moving it around and stretch it out even more so you could see it a little bit better. That's just for people who didn't know that. It's easier to have a mouse when you're doing this, and obviously a computer. If you would like to, you know, fix it, sometimes people are like, oh my gosh, like how do I fix this? Just right click and reset the chart and it'll go right back. It'll snap to it. Okay. So one of the first things that I did in this is I first identified some tools that I'm going to be using. And so if you look right here, guys, I don't know if you have a notebook in front of you, but yeah, I can always type it into the chat, but these are things that I just favorite so I can have them right here. It's kind of like a little tool belt. And so something that I favorite would be the trend line and also the horizontal line, the vertical line, the arrow. And then that's the first four you see right here. So the trend line, horizontal line, vertical line, arrow. And then I also favorited the rectangle. And then the last one that I favorite is the Fibonacci retracement tool. But we won't be really covering that on this call because this is one of the first calls we've done, obviously, with these people on this call, guys. And so what I do when I first started, you know, obviously having these tools lined up and being able to, you know, start trying to figure out, you know, when do I or how to kind of analyze these pairs is you kind of, you know, what I was saying earlier, you want to kind of go to the 2-hour chart and you just want to basically break apart these days with the vertical line, guys. And so look, I'll put it on the 21st, the 17th, that was over the weekend. Then it goes to the 16th. And you see what I'm doing here is basically what I'm doing is I'm separating this through days. Cause what I'm going to do is I'm going to kind of point out where, you know, the market moves the most during the day, and it'll kind of, you know, make you guys realize kind of what the best times are to trade. So I'm going to go ahead and just kind of drop some of these lines right here. I saw this on an education session, and it just helped me a ton to kind of wrap my head around, you know, just the market and it moving and stuff like that. And so you guys can kind of see here, this is about, you know, I mean, we don't really need to do too much. I might say just one more. So you guys can see here, this is separated all by a day. And what I want to kind of point out is, here, I'll go ahead and move that over real quick. I want to kind of point out is that if you look at this, I'm going to go ahead and take this arrow real quick. Just kind of, you know, just looking at this stuff, guys, you know, just obviously if one thing in the bottom right corner is you can see down here, it's right here. It's right here. Right now it's 2:21 UTC, Universal Trading Time, guys. And so 2:21 right now. And for me in Minnesota, it's 8:21. So you got to put that in retrospective. So that means 2 hours and 21 minutes ago. So at 6 p.m. is when a new UTC day started. This is the time that the whole world trades Forex off of. And so for me, wherever I am, you guys are obviously in different states, maybe Minnesota, but it's 8:21. So 2 hours and 21 minutes ago is when the new day started, which was right here on this most recent line right here. This was 2 hours and 21 minutes ago right there, because we are on the 2-hour chart. I know there's people in here who have been in here for a while. One of the really important things I want to point out if you are brand new is just understanding what candlesticks are, and I'll explain it in like 10 seconds. But see these green and red boxes? Green represents going up, red represents going down, and they also represent a certain amount of time in the market. Right now, all these candlesticks represent, in the top left corner, you can see 2 hours. Right now we're on the 2-hour chart. All this candlesticks are 2 hours. You can make it all a minute, each candlestick a minute. Right here, you can see this candlestick's a minute. On the right side, you can see there's 34 seconds left on this candlestick and a new one will open. So we're gonna go back to the 2-hour chart, guys, but kind of looking at this, like I was saying, you can see here, we'll kind of start here. What you wanna do is looking at these days, when is the biggest movement throughout the entire day? That's kind of what you want to figure out. When's the biggest movement? And in my opinion, it kind of looks like it's right in the middle of this. That's kind of what it looks like to me. And what you want to figure out is, so if this line right here, if this represents 6 p.m. and this represents 6 a.m., 24 hours apart, what would be right in the middle? Does anybody want to drop that in the chat? What would be right in the middle between 6 p.m. and 6 a.m.? If you want to drop that in there, guys. I'm just testing you. Because this right here, what you're going to see, guys, is that's basically going to be the U.S. Open. That's pretty much what we're kind of focusing on. These are both basically representing when the Japanese markets open and when they actually close. And so I would say, roughly the open of each one of these is when the Japanese market opens up, guys. It's basically when the start of a new day happens. That's the Japanese market. And near the end of the day is when the US market is opening. And so that's why it's important to kind of know when you see when there's massive breakouts, when there's massive movements, that's when you want to trade. But if you notice, some days it's consolidating what you're not supposed to trade. You're not supposed to trade when it's consolidating. It's not even the right time to trade in the middle of the day right there. And that's why it's important to trade when the banks are trading, because when the banks are trading, the market's moving. When the market's moving, you'll be in way more profit into your trades, guys. And so I'm going to go ahead and pull open this chat real quick. I saw someone dropping there. Noon. Let's get it. So hopefully that kind of makes sense to you guys. It's important to, just study the currency pairs, study USD JPY, study it's funny. They used to call USD JPY. They would call it the grandpa pair or the grandma pair. They would call it because it moves slow. It moves so slow. And I'll kind of point out what I mean by that. You guys see this measuring tool on the left side here. This measures pips. And so let's say, for an example, we kind of zoom in. This is today. I would say so. The high was about right there, and the low was about right there. So today the market moved for USD JPY 52 pips roughly down. It moved 52 pips down. You can see that right there, 52 pips. It went from 106.216 to 105.692. And if you don't want to have to calculate that math in your head, just use the little measure button and you can see how much distance it actually moved. The reason why I call it a grandpa pair now is because check this out. Let's go over to GBP JPY. So Great British Pound Japanese yen. Check this out. This looks relatively the same, right? This it looks pretty much the same. If you guys look at this, I'm going from USD JPY to GBP JPY, but check it out. I'm going to take the measure tool and let's go from the high all the way down to the low. That moved 115 pips. Now, looking at your broker, when you were comparing these, that's way. That's twice as much difference. But looking at the chart right here to the average eye, it would not look like such a big difference. Some currency pairs move way faster than other ones. See, USD JPY doesn't move very fast, but that doesn't mean you don't want to trade it. It's about, in HFX, it's about being right or wrong. But in traditional Forex, I really like trading GBP JPY because I'm trying to catch as many pips as possible, because it's a pips per, or it's the amount of money you make per pips can vary, but that's kind of how it works. So I'll go back to USD JPY though. I just wanted to point out it does move very slow, guys. And so what I'm going to do now that you kind of realize how to separate these days and notice when the best times to trade are, you can even look it up. When is the best time to trade USD JPY? And it'll kind of tell you. Forex trading. So this would be, that's in a different one right here. I think what I did last time is I just typed in Forex trading times. That might tell me when the hours open. Forex trading the best. Forex market hours. All right, cool. So right here, the New York Open, 8 to 5 p.m. Tokyo, 7 p.m. So basically, in retrospect, we're 7 p.m. compared to 8 p.m. That's Eastern time. So we're 7 p.m. when the U.S. market opens. And, Japan would roughly be 7 p.m. for us. And so that's kind of, you know, why you want to know when is the best time to trade each currency pair, guys. Hopefully that makes sense to you and that I was able to help you at all. What I'm going to do is I'm going to remove this stuff off the screen right now. Okay. So looking at this, what we're going to do to start off marking up charts is we're going to start on the 1 day chart. See, when you're looking at your broker, like let's say Race Option, Vita Forex, IQ Cent, Platinum Options, it doesn't really matter. You know, your broker is only showing about 5 to 10 minutes worth of chart time. It goes fast. That's only 5 to 10 minutes. And you know what that represents? Let's go to the 5-minute chart. That represents looking at this whole thing right here. This is USD JPY today on the 5-minute chart right here. So if we zoom in, your broker is literally only showing that right there, maybe 1 or 2 of them. That's it. And that's why if you're just looking at your broker and you're just trading, you're gambling. You're just gambling like crazy. That is so gambling. And I had to learn too, but that's why it's important to, you know, use TradingView to zoom out and look at the bigger picture of what's been going on. See, you might think the market's actually going up by, you know, looking at your broker, but in reality, it's in, you know, let's say a downtrend, which is important to obviously recognize, guys. And so what we're going to do though, I just wanted to point that out, is go back to the 1 day chart. When you're on the 1 day chart, what you want to do, first of all, when you're marking up charts, is you want to be able to actually identify when whole new perspective with pre-startup checks to analyze the market we're hopping in. Dude, it's crazy what we're about to talk about here. You know, these chart markup sessions, like Jade Hepper and all of them, this is like, you know, kind of what, you know, I would basically show them when they first got in the business, but now they've just been taking it to a whole new level, which is awesome that they're holding their own sessions. But what I want to point out, something that's huge, is where to put your focus and where to not. So we're on the 1 day chart, which means all these candlesticks are worth 1 day worth of time. Okay. So in reality, we're only going to be focusing right here. So if I zoom out, what I want to kind of point out to you guys is if price is right here, if price is just sitting right here, you said the best time trade was 7 when you broke it down to midday. That's not actually midday. See, the beginning of a day in UTC was 2 hours and 30 minutes ago, 6 p.m., 7 p.m. roughly. And the end of the day is, you know, 6 a.m., 6 or 7 p.m. In the middle of those white lines was just the middle of the day. Let's say that was either, you know, that was either like 1 or 2 a.m. or it was, you know, 1 or 2 p.m. and you don't want to trade at those times. That's what the middle of the day was. You want to trade in the start of where the white lines are, or the end where the white lines are, because that's the US Open to the Japanese Open or Japan Open. That's pretty much, hopefully that makes sense, Jordan. If it doesn't, you can kind of let me know. But what I want to point out here, guys, is you don't want to waste your time when you're marking up your charts. So I'm going to take this rectangle tool. Understand that price being right here on a 1 day candle, there is no way that in 1 day price is going to get all the way to where it was in 2015. So what I want to do is I want to quickly put a box here. We don't have to pay attention to literally any of that right there. Like literally any of that, because there's no way the price is even going to enter that in this day. I mean, it's so unrealistic. We're day trading, so we want to focus on minutes, right? But I want to point this out. And then right below it too, there's no way that price is going to get all the way down to where it was in 2013. And so we'll go ahead and we will draw another line, I'd say roughly right there. We don't have to pay attention to any of this area at all. The only area that we got to pay attention to while marking up this chart is right here where price is right now. That's the only area we got to pay attention to. Understand, we're looking all the way back to 2013. And the reason we're so far zoomed out is because history always repeats itself. This whole chart, it's not like this is a curving, bending, you know, trend. This is like, you know, up and down each day. And what it's doing is it's hitting new levels, hitting previous levels, you know, coming back, testing other levels. And so what we want to do is we want to find areas where price is repeating. So hopefully that makes sense to you guys why we focus just in this middle area. But what we're going to do to start off, we're going to grab the horizontal line and we're going to basically start drawing support resistance trend lines. So what I want to do is I want to start back here. I want to start back here 2013, 2014. What we're going to do to start off though, is I'm going to go ahead and I'm going to basically drop a horizontal line right here. This would be called a resistance. Price came up and it resisted right here and then it came back down. And this is on the big time frame. So technically what you're supposed to do, I don't really do it because like I've been doing it for a while, but we're on the 1 day chart. So technically what you would want to do is double click the line and you would want to make it, you'd want to make it thicker than the other lines, like right there, like the third thickness, because now you know that, hey, this is a big strong resistance and support. And so that's why you make it thicker. So I'll kind of keep it there for you guys for right now. You can draw more of them right here, another resistance. You can keep going. There's support, let's say right here. Here's a resistance right here. And you'll be able to see this with your eyes. I'm just looking where is price basically coming, down to and stopping and then reversing, or where is it going up to, stopping and reversing. That's what I'm looking for, because it's like hitting a wall. So right here is the support. I'll drop it right there. It came down, price bounce right there. And again, you just got to practice this and you'll get better at it, seeing it. I can see support and resistances everywhere right now. Right here would be another resistance. You can kind of keep zooming in and seeing more. Here's a support right here, this little candlestick. So I'll drop one there and you're able to obviously start seeing more and more and more. And as you see them, you want to keep on zooming in. And there's big ones that you'll kind of see as you get closer and closer and closer. Here's a support right here. And as we get a little bit closer, and there's more areas of support. And what I'm going to point out something though, once we get to obviously most of these filled out. Let's say there's a couple other ones. Let's say right here. Yep. Down here, even though it won't really touch there. Let's say right here. Okay, so looking at this, guys, what I see right now is I see, areas that it's bouncing off of. You can kind of see now different areas that it's obviously, bouncing off and onto. Notice how this one way up here, even though we're zoomed way out, it's way far away from price. You can just go ahead and remove that. And you can honestly just get closer and closer and closer. You don't really even need those unless you want to leave it marked up for a long time, but that's completely obviously up to you if you'd want to leave it marked up for that big of distance. And so what I'm going to do now is, now that I have it marked up, I want to show you guys something. So for an example, let's say we put this one right here. You can kind of, obviously as you get closer, you can kind of adjust them a little bit. But if you just take one of these lines, and let's say for an example, let's just say this one right here, for example, this is 104.153. If we just follow it back, this line here, I'm going to go ahead and just kind of zoom out a little bit. I can still see it a little bit. So if we just follow this back though, it was this one right here. If we just follow it back all the way back, you can see, boom, right there, it's supported in the exact same spot. Right there, it's supported in the exact same spot. I don't know if you guys can kind of see that, but you can see basically that history is repeating itself. Since it's supported there, that means right here it's supported, right here it's supported. Right here, it had some areas, excuse me, it's supported right here. It almost got to that level. It also hit it right here. Again, you can adjust it a little bit, but you see that price always repeats itself. Here, it had a resistance there, and we can keep coming back, more support here, more resistance here, and so on and so forth, all the way back, guys, to 2013. There's so many times when these lines have been hit throughout the past. Keep in mind that if we were to go to the 1 month chart, trading hasn't even been around that long. Look, this literally only has data available for us to look at since 1993. That's it. That's when people were able to start trading Forex. When Forex first started, you had to have $100,000 and call up your broker and be like, hey, enter it in this currency pair, guys. But what we're going to do is, on the 1 day chart, we now see our major supports and resistances. So what we're going to do is we're going to get closer now. We started very wide, so now we can see major supports and resistances over years. But what we're going to do now is get closer. Now what we're going to do is we're going to go to the 1, 2, 3, or 4 hour chart. Let's go to the 2 hour chart for a sec. You just want to be able to see, enough of what's been going on. And I'm gonna go ahead and step it back out to, let's go to the 4 hour chart. So want to see something crazy? You guys can see this right here. This was literally coronavirus. That's what happened. If you look at this, this is February, March, April, just crazy volatility. And it's kind of scary because like the market dropped that much and they artificially brought it all the way back up to where it was. And it's just insane. That's why if you go look at the DXY, which is the US dollar, it doesn't look too hot right now, but I just wanted to kind of point that out to you guys real quick. What we're going to do now that we have support resistance trend lines, John, is you can go ahead and kind of, move them around a little bit so they line up a little bit better with what your chart is obviously trying to show you. You're able to drop a little bit more if you would like, on certain areas. But again, we're just trying to really focus. We're trying to really focus on where price is, which is right here. That's really what we want to focus on, guys. And so now that we kind of have this figured out, I'm going to reset this chart. What we're going to do is we're going to go ahead and draw some trend lines now. Okay. So the way to draw a trend line basically is you want to, first of all, you want to identify, is this an uptrend or a downtrend on the 1, 2, 3, or 4 hour chart? You can see here, we're in a downtrend just overall. You can see, obviously it broke out for sure. I wonder if you guys are going to be able to see this better, if it would be light. Oh, of course I have white lines. That's hilarious. We'll have to go stick with dark for now. But yeah, you can see that we're in an overall downtrend, but it did just break out. But what we want to do is we want to basically draw trend lines on this downtrend. So it's kind of like a channel. It's a funnel. The way that I draw trend lines is you want to basically go, let's start with the bottom. All right. There's going to be a bottom of the trend line and a top of a trend line. In order to, draw a downtrend, first, what we do is, this whole area right here, we're going to go to the very far left side and the very bottom candlestick. But like the top one, you can see it. This is like the highest low. Here's a lower low. Here's a lower low, a lower low, a lower low. They keep getting lower. And here's the highest high, a higher high, but then a lower high, a lower high, a lower high. That's kind of how this works. But I would say, going to the far left, most bottom, I would start my trend line roughly around here. And sometimes people ask me, they go, well, what about this massive thing that happened with coronavirus? That is, I would call that an anomaly. That's like, excuse me, I call that an outlier. If you have the numbers 1, 2, 3, 4, 5, 75, which is the outlier? It's 75. That's the 75 right there. I'm just ignoring it because that was just absolutely crazy what happened. So what you do, right there, guys, I can kind of see with my eyes, I snagged the top left, most bottom candlestick that I can see fitting. I could have also done this one right here, but we'll kind of explain why. I'll even start with that one. In order to have a good trend line, you need at least 3 spots touching on it. So you can see right here, here's the first spot, boom, 1, and I'll go through it. And here's 2 and 3 right here, boom, boom. So right there, we already have 3 spots touching. If I bring it a little forward, there's 5 or 6. This would be like an outer trend right here. That's kind of an outer trend. But if you were to kind of take it in a little bit more where I originally set it, you're going to touch a lot more spots. You can see here now that we have a ton of different areas that are touching. And I'm going to go ahead and kind of line it up a little bit and then break this down. Sometimes when I was brand new, I would wonder myself, I'm like, okay, why is this person marking on the chart? Why are they putting it past, into it? And the reason we're putting it into it is because oftentimes what happens is price will come down to the trend line and it'll break through it. Look, I'll even give you this. I'll even show you like close up. Right here, guys, you can see price came down to this trend line, the blue trend line I draw, and it broke through it. It hit this support, and then it came back up, broke through the trend line again, and then came back down and officially broke through it. And then you see it gets stuck in these channels that we've drawn. Boom, 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 falls onto here, and then it comes back up. It gets stuck in these little areas. These are called support and resistance areas. One thing I'll let you know is that, let's say this right here. This is a resistance right here, okay? A resistance can also act as a support. You see right here, this is a support. When on the same line, it's also a resistance. It's just an area where price is having trouble breaking through. And that's what they call about breakouts. That's what they talk about with that stuff, guys. And so that's kind of the trend line for the top bottom of candle or wick. I like to say candle, not wick, because a wick often is a fake out. Like for an example, right here, you guys see this big drop right here? I don't know if you can see this big drop right here. See, you could have taken a trend line and kind of marked it up like this, but in reality, it does line up a little bit, but that might not be the most accurate thing as taking it from like, a wick, because a wick is going to be able to, show you a more accurate thing, because the wick just shows where price went. It doesn't show, like the body of actual price. The wick just represents basically what price reached up or down in that day. But it's just basically, it's kind of like one of my buddies likes to call it a box and whisker plot, but it's just basically showing where price went. It's not actually representing what price is at, if that makes sense. That's kind of why I don't really mark up on the candle or the wicks unless it really fits. I'm more so focused on the actual box of the candle when I'm marking up. And so I'll kind of point out something here though. I'll teach you guys something. This is more of an advanced thing though. All right. So according to, traders, I bet when people were trading right here in time, this was June 23rd of the summer of 2020. I bet when the market was kind of coming down like this, just in general, it was kind of coming down in this downtrend. I bet you people, they kind of saw this little bit of, oh, that was not what I wanted to draw. I wanted this. I bet, people saw this kind of downtrend that was happening right here. And they were probably thinking in their head, okay, the market's probably going to continue to keep going down this spiral that's kind of been happening, right now currently with this downtrend right here. And what the banks do, because the bank's goal is to have you guys lose. That's what the bank's goal is. 100%. Stock traders, the bank, stocks too. The bank is, their goal is to have you lose. Whoever the losing trader is in the market is the one losing the money. Whoever the winner is the one taking the money from the other person. And so the banks control this completely. And so let's say, for an example, let's say price was coming down to this trend line in June 23rd of 2020. Maybe a lot of people were in sell positions right here. They probably thought it was going to keep coming down to, let's say this area right here. And what the banks do is, let's say for an example, everyone was in a trade right, let's say right here. There was a ton of short positions. And what a short is, it means sell. So this is traditional for us, guys. This is like connected to the global market. A lot of people were in short positions, which is saying we're thinking that the market's going down. A long position is saying we think the market's going up. The bank can see how many people in the world, through all these banks, through all these institutions, all this, they can see in their back office basically at banks how many people are in buy positions and how many people are in sell positions, and they're going to do the opposite. And so, for an example, when everyone was in a sell position here, this is called a liquidity grab. That's called a liquidity grab, and liquidity means cash. This is something that the banks do on purpose. What normal people call it is a fake out. And so what the banks did is, with all these people in a short position, the banks, what they did is they dropped it down, or this is actually what I would say. People were getting into buy positions right here. This is what was happening. People were getting into buy positions right here, and they had their stop losses somewhere here, which means that if price got to here, it exits them out of the trade, they take a loss. But basically what happened though is the banks dropped it low enough to the point where they knocked out majority of these buy positions. They knocked them all out, took all their money, and then they made the market go back up and actually continue to go up. That's called a liquidity grab / a fake out. And so it's really important to watch out for those. You could have avoided that by obviously waiting for this next candle to go lower than the previous candle. That gives an 80% confirmation that's going to keep going down. But this is why it's kind of funny. I told you guys, like in the beginning, it'll be super basic where you're just learning how to mark up charts, draw lines. But I kind of like to intertwine a little bit of fundamental analysis and obviously get a little advanced sometimes, just because it's fun learning this stuff. Even if you don't understand it right away, that's totally okay. Trading is a journey. Let me tell you guys some statistics about trading real quick. You ready? And maybe some of you have heard this before, but not just our company, but everyone in the world, 50% of people on the entire planet, not just our company, the whole planet, cryptocurrency, stocks, mutual funds, all this stuff, 50% of them quit doing it in 30 days. And that's just because they don't really have enough here to do anything successful in life. They give up pretty much everything they start in general. 75% of people quit after 3 months, 90 days. They think that it'll never happen to them. They'll never understand what's going on. And, they just give up after 90 days. 90 days goes by like that. 90% of people quit trying to learn how to day trade in 6 months. Here's the thing though, if you look up how many people are actually successful at day trading, it's the 5 to 10% that literally never quit. They never stop learning. They never stop applying. They never stop obviously trying to understand the markets. You're always a student and they understand that. And so what I challenge you to do is, maybe you don't understand some of the things that we're kind of going over on this call. Maybe you do, and props to you if you do. It's totally okay if you don't. Everyone's learning at a different pace. Don't compare your chapters. But my challenge for you is to not be the 90% of people that can't even make it 6 months of trying to learn the skill set. Because if you can make it, if you can last, you're going to be very heavily rewarded once you figure out how risk management, technical analysis, fundamental analysis, how you understand that stuff working. You'll understand the market so much better if you just keep at it, guys. Everyone has a different timeline for when they'll be successful. Okay. So what I'm going to do real quick, and then I'm going to kind of dive into a couple other things because we do have, it's right now it's 8:47. I have the overview coming up in 13 minutes, but I'm going to draw the top of this trend. Okay. So this was the bottom of it right here. It basically it's holding up the trend. That's pretty much what it's doing. It's holding it up. What you do for the top is you go to the top left, or you go to the left side most top candlestick. You don't want to go up here because if you look, this doesn't touch like any candlesticks. It just doesn't fit well, right? But what you would want to do is now sometimes people would say, okay, well, what about this one? This is the top left one. That one also doesn't touch very well, so we don't want to use that one. That's also an outlier. What we want to do is use this one right here because this is going to fit our trend line the best. In my opinion, that's what I would say right here, guys, would be fitting this area the best, guys. And so if we go ahead and zoom in, what you're looking at here, this is the primary trend. Okay. This is the primary trend of what's going on. The one that's currently going on right now, which I would say would be right around, here, this would be called the secondary trend. This is like a trend within a trend. That's I accidentally just dropped the long thing. This is like a trend within a trend. This is basically, kind of what's currently happening with USD JPY, guys. You can see, overall it's in a downtrend, but it has right now broke out of the trend and it's currently going up. Just in general, if you've been able to learn something on this call so far in terms of technical analysis, just drop a 3 in the chat. I just want to make sure people are following along. If you're able to actually, just kind of grasp a little bit of what's going on and just, just being able to understand the market a little bit better. It was these type of sessions where I started really focusing on me learning was what really helped me be able to obviously take my trading to the next level, guys. And so remember, we're going to focus on this most recent trend that's going on now. Technically, now that this trend was broken, that this one was broken, we don't even need to pay attention to anymore. You could just delete it if you wanted to, but I'm going to go ahead and just leave it just in general. But yeah, you could technically delete it. If you're looking back at these other trends, let's say I zoom out back here, this was a trend back here, guys. This was one of the trends I used to mark up back in the day. Right around here, I'd say that was the trend. Since that was completely broken by coronavirus and now it's in a downtrend, that's an old trend. It doesn't even matter anymore. You can just basically delete that. So let's go focus on this most recent trend. All right, guys. So remember, we're on the 4-hour chart. So what we're going to do now is we're going to go ahead and we're going to bring this puppy to the 15-minute chart. Okay, we're going to bring this to the 15-minute chart. And now you can really see where it's bouncing off of certain areas. You can really see, notice how we've started on the 1 day. We did our support and resistances just up and down, right? Just up and down horizontal lines. Then we got to the 1 to 4 hour, somewhere in there. What can you see the chart the most in? Sometimes it's a really big trend that's happening. That's why you have to look in the 4 hour. You can just see more of what's going on. Sometimes it's a really recent trend. We could be on the 1 hour chart right now and see this. So we might even have to go back out to the 1 hour. Yeah, this is the 1 hour chart right here, which all these candlesticks are 1 hour. But someone said 3s. But yeah, so what we're gonna do now is focus on. Okay, so if we were to, obviously see what's going on right now, let's say the 15-minute chart, where is price going to go now? This is kind of the the deciding factor of when you're trading. Is price going to, continue going down this little tiny trend that's being formed right here? You can kind of see this little tiny trend that's being formed. But again, since this is the 15-minute chart, this is a very weak trend. This is so weak. You can find trends all over the place. You can find trends here. You can find them, a ton of different spots. These are, again, secondary trends. But you know, they're very, very weak. They don't represent much. They could easily be broken. The ones that are hard to be broken are these big ones that have been happening. And if you zoom out even further, the 4-hour chart, that big one that we drew going down, those are harder to be broken. But these little tiny ones, this could be broken so quick. So this is like you call this like the third trend if you want. But what we want to figure out right now is, you know, on this 15-minute chart, now we identified this little trend is it going to break through? And is it going to come through and break through this area? Is it going to, you know, break through and then come back down to here and bounce off the outside of the trend line and keep going? Is it going to get stuck in these channels? Like where is price actually going to go? We have to figure out where it's going to go, guys. And there's a few ways how you can figure out, you know, where price is going to go, or have an idea of where it's going to go. But can you see how there's so many different, you know, possibilities of what could happen here in terms of price? I'm just drawing out arrows of which way price could actually go. There's so many different, you know, possibilities. But what I would kind of say though, is you have two options right now in order to figure out where is price actually going to go. You have the option of using indicators, cash trap. That's an option. It works very well. Some people dominate with it, absolutely dominate with it. It's just crazy. Some of the stuff that I've seen, some people, they need other ways. This is what I'll tell you. It's all about you as a person. Everyone's different. It's about you finding a strategy. It's about you finding some sort of way to understand the markets better and to be able to pull money out of the markets. That's what it's about. There are different ways. There's price action, which price action is where you're literally just looking at the candlesticks and you have support, resistance, trend lines. That's it. That's called price action. You're just marking up the charts nice and raw, and you're just watching what the candles do. You're waiting for confirmations. You know, did this candle just get lower than the previous one on the 15-minute, on the 30-minute chart? Did it break the high of the previous one? You know, is it following the trend? Is it trying to break a support, resistance, or trend line right now, guys? These are the things that price action is. Or you can use indicators, which for an example would be like this. You know, here would be some indicators. This is like a fake version of Matty Pip's cash trap right here, but this is where you can start using indicators on like the 5-minute chart, and you're able to, you know, start trading off of this, you know, obviously watching these different lines and stuff. But it's just kind of up to you. You know, you'll eventually kind of learn, you know, more of what you like, what you don't like. What I personally like the best is I like doing price action. I like actually marking up the charts. I like, you know, predicting where the market's going based off of my drawn analysis, because it creates more of like a sharp, you know, look in your head of the market. And so for an example right here, based off of this trend line, and you can see it's been resisting. It broke through, it created a support, and then it came back in, resisted. It's in this channel right now. What's going to happen right here? What's been happening? What are the odds that it's actually going to, you know, break? See, you can see right here, this is even a resistance area. Like right here, this is where it came down supported, but you can see it's below that right now. So it's going to have to break through this previous support. It's going to have to break through this as a resistance. It's resisting right now. It's having troubles breaking through this right now. And it's going to have to break through the trend line. It's going to have to break through both of those in order to actually enter into this area. Keep in mind that there could be a really quick fake out. A new candlestick just opened. It could, you know, fly up, and then just like this wick right here, it could just retract back in, you know, but you can see here, it's starting to resist off of it. It's important to obviously, you know, pay attention to these things. So, you know, pretty much what's going to happen, it's either going to come back down here, and it could hit this area of kind of support right here. This is kind of an area of support, and it could continue to go back up, or it could simply, you know, come through and fill this whole thing again and, you know, keep going down this funnel. That's really comes down to, this is where it gets kind of intense, a little more advanced. I don't even know if I want to get too much into this, but this is price action right here, guys. I'll go to the 15 or 30 minute or 1 hour chart. Let's start with the 15-minute. It's a little more weak. So what we're watching is, can this 15-minute candle right now, what we're trying to pay attention to is, can this 15-minute candle right now, it has 3 minutes and 55 seconds left. Can it close above this area? Can it close above this area? Notice that it almost got above it. I'll kind of stretch the candles out. Notice this is where it comes in handy. It's almost closing above it, but right now it's below it. If it can close above it, that's like a 50% chance that it's going to keep moving up. If you want an 80% chance, when the next candlestick opens next to it, if it breaks the high of the previous 15-minute candlestick, if it breaks the high of the previous 30-minute, the previous hour, you know, the bigger the candlestick, the more of a confirmation. So if this were to close above this trend line and above this resistance, and a new candlestick opened and it passed the high of the previous one, it created a new high, that's a sign of what's going to happen is it'll probably go to either this next area, which I'd say right around here. It'll probably go up to this next area. You see how many resistance, how many times it resisted. It'll probably travel up to this area right here, and then potentially keep going to around this area right here, guys. That's called price action. You're waiting for a confirmation of the next 15, 30-minute, 1 hour, 2 hour candlestick to break the high of the previous one. Imagine if the next one day broke the high of the previous one. That's an even bigger confirmation. But you can see here, guys, what's happening. In these last 2 minutes and 30 seconds, it's the most volatile it gets for 15-minute candlesticks, for 5-minute candlesticks, for half-hour candlesticks, for hour candlesticks, for 4-hour candlesticks. You know, when it comes to the end of that big candlestick, not 1 minute, not 2 minutes, not 3 minutes, 5 a little bit, but it's mainly 15, 30, you know, hour, 4-hour candlesticks. Right near the last few minutes of it, 5 minutes of it, gets really volatile. So it's because it's the buyers and the sellers fighting right now. A lot of people in the world are saying probably they're getting in short positions right now. People are saying sell, sell, sell. They're getting in literally short positions. And you know what they look like? They look like this right here. I'll even show you. Let's do a short position. This isn't selling. This isn't actually doing it. Let's say I got into one right here. They're saying, I don't think it'll go past here, but I'll give myself this much risk. But I think that over time, it's going to come back down to here. And if it reaches this area, take profit, exit me out of the trade, secure my profit. However, if it continues to move up to here and it hits there, X me out, I'll take my loss. That's what people are fighting over right now. You got people doing short positions, and then you got people doing long positions, which that's people that are fighting right now. They're like, nah, they're like, I think that it's not going to go lower than, let's say here. And I think it's going to continue all the way up to here. This is what you got. You got people fighting, it's going to go up, or people fighting, it's going to go down. That's why what I like to do is I like to watch price. I like to pay attention to news. I like to pay attention to currency strength meter. You know, I like to pay attention to these things. It looks like the short positions, people selling, are going to win on this candlestick. And what you would really want now in order to actually, you know, in order to actually really get into a sell, in my opinion, I mean, you could, because it's at all this resistance area, would be, let me measure how much this actually is. It's not even that much. The USD JPY moves so slow, but it only matters for traditional Forex when I'm saying that. It would be basically if another candlestick passed the low of this one. That's what would really say, okay, this is probably going to continue back down the trend. Guys, listen, it's 8:59 right now. And what I wanted to touch on, we can do another one of these, you know, either later in the week, next week, but I want to touch on currency strength meter. I know a lot of you know how to use this. I wanted to talk about how they inverse, how you can use it to your advantage to say, okay, so if this currency is stronger, that means all these currencies should technically be moving up. Currency pairs, obviously, you know, Forex Factory, you know, getting into a little bit more about how news works. I can really dive into how news works and how to actually analyze and read this to your advantage. I would use the example of October 3rd of last year. Something to do with oil, crude inventories, guys. But with that being said, though, I do gotta hop off. I got the overview coming up here at 9, but hopefully you guys were able to you know, learn something and, you know, just like, you know, really soak more into your brain about this. I'll do more of these calls if you guys want me to. A lot of the traders don't really touch this deep in depth, you know, fundamental stuff. They just really, someone's like, would you do a 15-minute trade based off this analysis? You're hilarious. That's funny. That's good stuff right there. But no, a lot of people just don't, they don't really dive into this deep. This is stuff that like Evan Cabral dives into. He dives into market, like understanding just the market in general, not just catching trades and stuff like that, guys. But yeah, just let me know, you know, let people on your team know, just reach out to me if you'd like me to set up a call and we can run another one of these. Maybe I can open it up to the entire team, but I had a good time doing this. It's been a little bit, but that was a lot of fun. I'm going to go ahead and end this call though, hop on the overview. If you got some guests, let them know. Let's get it. All right. Tad, I appreciate you setting this up. I'll catch you guys later. Okay. All right. Peace.